Good day, ladies and gentlemen. Excuse me for that. I hope you guys are fine, are doing well, and are learning as well. Welcome to the second video of technical analysis. So basically today I'll be looking at our book that we wrote, which is our Forex trading and indices trading book. Basically, it's something that we would like to share with upcoming traders out there who are willing to learn about the market and how it moves and how it flows. So in the book, we cover a bit of understanding of how to look at the candlesticks, what it contains, the opening, the high, the low, and the close. And we immediately dive into market structure and market sentiment, then how to use the Fibonacci retracement tool, how to identify harmonic patterns and other patterns in the market. Then we look at identifying trend direction, trend reversal, pullbacks of a trend, and a possible continuation of the trend, right? Then we look at the summary of the correlation of Forex pairs and indices. From there, we get into understanding the fundamentals, that is news trading. Then we look at risk, trade, and money management. And lastly, we focus on Forex psychology. This annexures in the list of sources is if we obtain other information from elsewhere, we have to reference it in our books, right? So basically, we can just go into it. Looking at the candlesticks, each candle, you can have either a bullish, which here I identified with an unshaded color, and then you have a bearish candle, right? So each candle has an open. That is the way the body of the candle starts, and it has a close where it ends. It has a high, the wick, and then it has a low, right? This narrow protruding line, it's called a wick. This one is called a wick, right? For a bullish candle, it opens here at the bottom, right there, and then it closes here at the top. It has an opening at the bottom, close at the top. It has a low at the bottom, a high at the top, right? A low at the bottom, a high at the top, an opening at the top, and a closing at the top. It's just the difference just on the opening and the closing, right? So they differ in terms of time frames. 1 minute time frame candles, they form every minute. I can quickly show you by just going to a chart. We can take this from a minute. You can look here, it's 58, 59. Immediately, there must be a new candle that is being formed. You can see that. Immediately, there's a new candle that is being formed, right? Therefore, after a minute, a new candle is going to be formed. A new candle after a minute will be formed on a 1 minute time frame. On a 5 minute time frame, after every 5 minutes, the candle will be complete. Meaning here we are waiting for 1725 for a new candle to be formed, right? So here we are just basically waiting for a few seconds to hit. Then the 1 minute chart, the 1 minute candle will be complete, right? We'll talk about the study of the candle and their times of change and their times of volatility so that you can understand candles better. But right now, I just want to demonstrate to you that every 1 minute on a 1 minute chart, you can see here 1 second, 2 seconds, a new candle has been formed. Cool. So going back, you should understand that the candlesticks differ according to time frames, right? time frames, they also differ. You don't just calculate from 1 to 0, 1 to 4, and then you say it's 4 hours. You must understand at what time does the 4-hour chart changes, right? We'll talk about it when we outline candlesticks and their times of change in detail, right? So cool. Now, this is just to cement what I said yesterday, that when trading, you first need to analyze where is my supply and my demand zone. And these are the areas where price is expected to fall or rise, right? And we have, I also cover economic indicators, the news, what is happening, right? And then I go directly here to illustrate the supply and the demand zone. You can see here over there where the price, the bullish price loses momentum at the top, it's a supply zone. At the bottom, it's a demand zone. You can also have a supply and a demand zone in the middle because of consolidation. This is where the price just beats around the same area before it breaks out, right? Therefore, in the book, we also cover market sentiment. This one, it's a special lesson on its own. We're looking here specifically on USD, JPY, the dollar index, and then we also focus on indices as well. This is just to show the correlation. I'll get to it specifically by itself. And then determining trend direction. Remember yesterday I spoke about the MACD histogram, and we also have a special software that we use to tell us which direction is the market taking, right? And we also, mostly, I prefer using the MACD, right, histogram to determine what is my point of convergence and what is my point of divergence, especially on a higher time frame, so that I can be able to enter the market safely and knowing that the direction has completely changed, right? You will understand this once we have gotten straight into the lesson and are really pushing. So this is the software. As you can see over here, it tells us to sell gold, sold gold. That is the demand zone, the take profit. Look at the MACD histogram. What does it do? Immediately on that, it tells you that there's a divergence. The MACD tells us that there's a divergence because the histogram was going down, right? And the trend from point A to point B has been pushing up. Therefore, as a result, I'm fully confident that the market is going down. Therefore, I can sell at this point, right? Even over here, the market has been confirmed by the crossing of the histograms that were going down, and a signal came out a bit later. But because of we have the histogram and we know our analysis, this is a bearish bet. So we understood what we were doing, then we enter the trade, right? As you can see in the next chart, the software took out the signal a bit late, but we entered early. We took profit just below the 38.2, and we also reanalyzed and said it's going to, the trend line will break to the 38.2 and continue all the way to the 0 level. Let's check what happened. Look at the histogram, it crossed as well, right? So what happened? The trend line broke, turned exactly at the 38.2, continued, and it was still continuing. So in the second chapter of the book, we look at harmonic patterns, and I also discuss the Fibonacci tool as I did yesterday with you. If you haven't watched the video, you can go to our YouTube channel and check out the video of lesson 1, technical analysis. It's much easier that way, right? So here I was just showing on the book, you'll understand that how do you identify or how do you draw a harmonic pattern, right? The expansion, or this one is the use of the Fibonacci tool. This one is the use of the expansion tool. Then here I listed all the possible harmonic patterns that you are going to meet in the market. The triple bottom, the double top, the pennants, the descending, ascending, symmetrical triangles, your falling and rising wedges, your bearish catalyst, your bullish catalyst, all the way, including your inverted heads and shoulders. Right. So this is a bet. A bet is commonly known as a double bottom or a double top of MACD, of convergence or divergence, right? So whereby the first retracement or the first pullback occurs between the 50 and the 61.8 Fibonacci retracement, with a possible continuation all the way to between the 88.6 to the 100 Fibonacci retracement. That is the D point. So where it starts, you draw an X, and then that is the first leg, and then where the pullback or the retracement starts, it's A, projection to B, continuation to C, then pullback or a change in direction all the way to D. Then your take profit is between the 61.8 and the 38.2, or you can just draw it in a better way and say your take profit is 38.2 or 61.8. Right, this is your bullish bet. That is your bearish bet. And there are others that I also discussed. That is your Gatling. This is your bullish Gatling. This is your bullish, butterfly. Bearish butterfly, bullish crab, your bearish cipher, your shark pattern, your bearish shark, you have your heads and shoulders. Then you have your inverted heads and shoulders. Then you have your triangle. No, this is your wedge. It's a wedge. Then you have a bullish flag, right? That continues in a bullish direction. It's a bearish flag, but it continues in a bullish direction, right? That's what happens with a bearish flag. Here you have a rectangle pattern. It's just a consolidation of price between 2 points. And then finally, when it breaks down, it continues in the same direction, right? I'll discuss them on a special lesson of harmonic patterns. There's another one of double top, right? Another one of bearish. If we can look at it, this is US Nasdaq 100. Let me check one at the top. This was, okay, it was not US, I thought it was related. US 100, which is the Nasdaq. Look at the bearish flag, beautiful, beautiful. Then here we were just trading with the low of the day and purely using market sentiment to understand what is happening with the Nasdaq. This was basically the first analysis. From the top here, it has to reject, coming to take profit here, and then from taking profit here, then must continue pushing up in the bullish direction, right? So what happened? From there, came down, created a bit of liquidity. Let's go back to the first chart. What did it do? Market maker's liquidity generation point. So around this area, we're expecting the market maker to push the candle a bit down, right, to full traders, and then for the bullish direction to take place. You can see that the market maker has made a bit of liquidity. It went back to the same bullish direction, right? Some more analysis. Then we enter into mastering technical analysis. Here we are basically on an advanced level, summarizing everything that you need, and also taking into account the news that take place in the market. Then here we specifically focus on how to enter a trade. Even there's a special lesson on it as well. Then trade and risk management, trading all pairs. It's not smart as we say. Focus on one pair and master it, right? One or two pairs, yes, and master it. But when you're trading, you must also look at your account balance and consider into account risk management, right? So here we focus on fundamental trading in the market. We summarize the major news, your GDP, unemployment change, NFP, the core CPI, core retail sales, interest rate decision, and something that is no longer there, Brexit. Right. So, and now major pairs to look at. For Australia, we suggest you trade on USD. For USA, it's gold, the pound against the dollar against the Japanese yen, or USD or Euro USD. For NZD, NZD-USD or NZD JPY. For CAD JPY, USD CAD, Nasdaq. Right? And the news continuation into affecting the overall market direction. This one is what happens after the news are released, right? What happens after? What do you need to consider? Whether to hold your trade or to close it, right? Some more analysis on Nasdaq. You can see here, that is the first analysis. Said that Nasdaq will consolidate for a while, maybe pull back here and then continue. What happened? It consolidated around the same area, but then broke out, right? We're still safe. What we do, we enter above the trade. We don't enter below the trade, we enter above, so that we can have proper risk management, right? Some more convergence and divergence over there. And GBP USD perfect analysis. From the very beginning all the way down, from down here all the way up, and continuation. This is basically a double top, a Gartley divergence, right? So look at it. That was the first analysis. That was the second analysis, came all the way down, took all the profits. That is this one. Came down, took all the profits, continued, right? Continued over there, took profit. That is the Nasdaq, right? So there's quite a lot of analysis that we've made, even the USD CAD that I showed you yesterday. So this is just to cement. And here's the quotas theory. That is just to cement what you need to learn, right? So this book it's not for free, but rather it's for sale. But it's just to cement what you need to learn. So basically, I gave out a signal today that my people should sell Euro NZD. My take profit was let me check, 1.84059. 1.84059. 1.84059. So it basically took profit because it's now 1.83 something. So as you can see, it seems like it's still continuing in a bearish direction. However, I gave out a signal that people should take profit. In fact, one of them has just reported 456 only from this trade. So yeah. This is good. So yes, good people, learn as much as you can. Today is a very short lesson. I was just sharing about the book. Remember, I'll break it down on other chapters, on other videos. I'll break it down on what you should learn, how you should learn it, and what you should focus your time on, so that you cannot waste your time in learning things that are very, very much unnecessary, right? So as you saw, the Nasdaq has been consolidating around the same area for a while. This is the area that has been taking Basically, that is where Nasdaq has been priced on. If it goes beyond, below, or a bit above, it's therefore stopped, and then the market will start over. Meaning that if price goes above this point, many people, or those who have been noticing, like me, we sell above this price, and then we buy. But when we buy, we don't just buy, we buy very, very low so that we can allow the market maker to play his tricks, right? To play his tricks. If you can go to a 1 minute time frame right now, you'll realize that there are already sellers in the market, as you can see. So you just need to be careful though, because this is Nasdaq. It's very, very much liquid, and it's very, very much risky. Many small accounts are being taken out at this moment. So you just need to be careful of how you see the market. Look at this trade. It's still pushing, and it's breaking the low of the day. It's still pushing. It's breaking the low of the day. But take profit and move away because you're safe. So see you in the next video. I hope you enjoyed this one. I hope you get to also subscribe. And if you want to learn anything from ourselves, come through. We'll be glad to share all the materials with you. Thank you very much.